Let's take a look at this dropship outdoor living business that was recently listed for sale at an asking price of $500,000. It is making $142,490 per year, and that works out to a valuation multiple based on the last 12 months of 3.51x. Interestingly, I have a lot of experience here, not only with online businesses, but with the outdoor living vertical. So in this video, I'm going to unpack the details of this listing and share some of my experience-based insights into what I like about this business, don't like about it, some of the risks and challenges I see that it might have, and ultimately my take on the business valuation. Now, considering that, I have a lot of experience here in the outdoor living space, I was really thrilled when this one came to me yesterday. So I haven't even included it in the Acumen Wire newsletter, which is a newsletter I run where I send out online businesses that were recently listed for sale with a focus on time-tested, established, and profitable online businesses. I'll put a link below to acumenwire.com, so head on over there and get signed up. Now, let's get back to this listing here. Since I already kind of mentioned, I have a lot of experience in the outdoor living space. The first business, like real business that I started was a patio and outdoor living construction business in Southwest Florida way back in 2010. I did very well in that business, operated it for 10 years. I grew it substantially through digital marketing, and that kind of segued into how I've came to operate online businesses these days, and ultimately sold that business in 2020. And I'm happy to say that it is still thriving under new ownership. So over the years, I've always thought, hey, how can I tie this outdoor living thing into e-commerce? And I've thought about that in various iterations. Never pulled the trigger on it, but anyhow, I was really thrilled to see this business come to me yesterday. So let's go through the details. I'm going to go through the listing here and pick out some of the key details. I'm not going to read it all word for word. And as we go through them, we'll talk about them in context of what I like, don't like, etc. about the business. So first thing, right from the title, we can see it's a drop shipping business. They claim to have a high AOV and US manufacturers. And then if we see the revenue and the income, we can do some quick math to see this business has a 14% roughly margin. They say the business stands out as a premier online retailer in the outdoor kitchen and living space, offering a unique end-to-end solution for custom outdoor kitchens with nationwide white glove delivery service. I think that's crucial. It was started in 2014, but it has been under current ownership since 2018. So the business has changed hands, and they made a strategic pivot somewhere under the new ownership to premium outdoor living supported by proprietary white label product line. So it seems like they're selling it under their own brand. They've got a defensible position as the only online retailer providing comprehensive outdoor living packages, from custom outdoor kitchens to complementary products like pergolas, outdoor TVs, and hot tubs. That seems like a very, very wide range of things. And the business maintains strong profit margins of 25% on custom outdoor kitchens. Okay, but note that is higher than what they published or what we calculated from the published numbers. While requiring only 20 hours per week to manage, it's a lean, independent, location independent, and minimal overhead, supported by an experienced virtual assistant who handles 85% of the issues. They've got a white glove delivery network, which ensures premium service, with 80% of the customers opting for that premium service. And the growth potential is multifaceted. They're getting a 20x return on ad spend. All right, so what do I like about it? First up, dropship. And this can be a love-hate thing. Dropship can be a love-hate. When you're not holding inventory, you don't have to worry about inventory. There's a saying in accounting that inventory happens. In this case, inventory is not happening to you, it's happening to your supplier. So that's nice. I like that. But on the flip side, a dropship business often has no real moat, or it has damn near no moat because anybody else can start this business without considering inventory and holding inventory and the capital of acquiring inventory. So all you got to do is get a website, get people to buy this stuff. So That's a pro and a con. Now, let's talk about the margin here. And margin, I will say, is a lot lower than I would like to see. So we're not moving on entirely to what I don't like, but I think we have to talk about this margin first, because margin is one of the first things I look at when I'm analyzing any business. And for an e-commerce business, I typically like to see a 25% margin. I've often said I would not buy an e-commerce business that has below a 25% margin. Of course, there's exceptions to every rule, and that is, A, I've got some expertise in the particular industry, B, I see a lot of opportunity to grow it, and C, the valuation multiple is realistic, or what I'd consider good for the opportunity and the combination of my opportunity and expertise. So it has a good valuation multiple. Anyhow, yes, I would consider lower than 25% in some extreme circumstances. This business at 14%, lower than that 25, but then they say they got a 25% profit margin on custom outdoor kitchen. So seems like they're making the bulk of their money on the outdoor kitchens and then selling some of this other stuff. So you'd have to break down what the actual revenue drivers are here and what you could actually sell. And the other thing is this coming after or before advertising expense, right? And this might be that this is 25% after cost of goods sold. So this is your gross profit margin of 25%, but after your actual advertising, you get down to this number right here. That is not bad, because that's showing that they've already got systems for acquiring customers from paid ads in place and can operate sustainably with that. All right. I like, moving back on to likes now, since we've addressed the profit margin. I like that it has changed ownership. The business has shown that it can remain successful and prosperous after changing hands. That's always good. The business I recently bought in the accounting continuing professional education course area, or niche, I should say, that business had changed hands. I am the third owner of that business. So I like that about it. I like that they've got white label product lines, so they're selling it under their own brand. They're not selling somebody else's brand, whereby they have to compete with other retailers of that product. And then I like this custom right here. The business, or the listing, does not really give us much insight into this custom, but I'd be really curious to find out how custom this is. Do these things need to have pre-designed plans or some type of design service packaged with it? Is that already included? Could that be upsold and added to the business? Would that add value? The custom thing is interesting, and we don't have enough context in this listing here. I fundamentally like it because that gives you a area that you can compete on customer service, and if you can handle that all remotely, that can be done at a very low cost, right? If you can have the virtual assistant handling the custom aspect, or maybe the virtual assistant is like a project manager, or could be a project manager in between the customer and a designer, right? So you can kind of, blend that all together, and that creates more value than somebody that's just putting these up on a website and selling them and getting them off. So I like the custom. And then the comprehensive outdoor living packages. Let's see, where is that? Here it is, comprehensive outdoor living packages. I like that they're selling comprehensive packages, right? Bundling it all together, increasing AOV. But you have to be careful with this, that you're not bundling in lower margin products, right? If you're bundling products, you want to increase the margin. You want to sell the higher value products. So I don't really know what this business is doing here, but they mention 25% on custom outdoor kitchens. We know that that is higher than the overall margin of the business. So, how do these complementary products for the comprehensive packages play into this? That would certainly be something to unpack during due diligence or even pre-LOI as a buyer. So I like that they're selling packages, but I think that there's room to optimize the packages. Okay. And then I also like that they've got the virtual assistant handling most of the business and that 85% of customer support issues. So that's what I really like about it here. What don't I like? Well, let's talk about where it was the white glove delivery service. And maybe this is something that you like, but delivering products, particularly large products, is difficult. So a lot of your business reputation depends on this white glove delivery service. Now, that said, it has been in place clearly for a few years, right? The business has existed. So it's good that you've already proven that concept out and that the white glove delivery service works. We're hoping it does, at least, that that's how the business is successful. But you also run into a lot of risk there. Your whole business or the business reputation, the reputation of the business hinges on this white glove delivery service. And that can go so many ways, right? What happens when something gets damaged on delivery? What happens when they're delivering it and then they scratch the homeowner's door or something like that? What about when the delivery service doesn't deliver on time? And that's one of the big challenges with any large product e-commerce business is shipping and delivery, and oftentimes setup and install. So who sets these things up and install? What happens if a customer damages something on install? What are the returns like in this business? Now, when you're buying an existing business, you obviously get to see this data, but you'd certainly want to diligence it and make sure that it's accurate, that they're not underreporting damage claims from the delivery service, which I have no doubt absolutely happens. The other thing here is customer concentration and average order value. We don't know what the AOV is, but when I'm seeing custom outdoor kitchens and pergolas and outdoor TVs and hot tubs, I'm seeing an AOV of above $10,000. Well, then when you divide 10,000 or 1 million by 10,000, you see where I'm going with this. That's only 100 sales a year. That's not a ton of volume. So you might not have high customer concentration, but you have very, very, very low volume for an e-commerce business. I mean, there's e-commerce businesses, and I run one that does 100 orders in a day. And when you get that kind of volume, then you can let the advertising algorithms really go to work and optimize for getting people that are going to buy. But when you're only getting 100 of them a year, so 2 a week, and then maybe some of them, don't even get picked up by tracking pixels or cookies. So there's only, say, 75 a year, maybe 80 a year that get fed back to the advertising platforms. You're really not getting enough conversions here to let the algorithms actually do any work. So one of the very big downsides of high AOV, high ticket, low volume products here. So I really, really don't like that. And then finally, the profit margin. It's not optimal here. But that said, we're still talking about a dropship business. So for a dropship business, these profit margins are actually pretty good. That said, I would like them to be better. So, to kind of tie this all back into what do you need to do if you want to get in the driver's seat of this business and grow it? Well, you could leave it alone and cash your check for $142,000 a year absent any major risk, which your risk here is, I think, probably Google search volume. I saw some organic traffic mentioned in there. All right, but assuming it's stable, you let it churn $142,000 a year. Personally, I think that's a very poor, uneducated approach. Maybe not uneducated, but not the best approach. If you're going to buy an online business, you got to have a growth plan, right? So where do you grow this? Well, you grow it with paid ads. That could be tricky because of the low volume of conversions. Maybe you do some content marketing, which is kind of like organic, but start developing the content after these products are installed. They talk about an untapped B2B channel, which presents an immediate growth opportunity. This can and does play out here. I'm thinking as I'm speaking, and I'm not connecting the two. So let me just try and express what I'm thinking about this. Number one, you have to compete with wholesalers, like your own supplier in this case. Is that possible? yeah, it's possible to compete with them, but how you'd have to do that if you're building out this B2B channel is making the ordering process easier for the contractors. Contractors will order from the source that is easiest when they have a complex product. So you would really need to analyze the B2B ordering process for contractors of ordering these outdoor living products through other vendors and figure out, hey, can we make this a lot better? And I say this from my experience in the space. I would order from vendors where they had an easier ordering process when things were really complex and custom. So that could work here, but overall, this does not seem like the easiest business that I've ran across to grow. So let's go back to this valuation multiple, 3.51x. Is it worth paying that for this dropship outdoor living business? My quick take on this is that the valuation multiple here is a little high. You know, you do have a proven business model. You've got the delivery service in place, for better or worse. You've got a method of delivering them. You've got a supplier that can fulfill these orders. And then you've also got your actual support staff and the sales infrastructure in place for this. That's what you're getting when you buy this business. Now, let's touch on that supplier risk, because that is something I just thought of here. You're beholden most likely to this outdoor kitchen and outdoor living product supplier. Is that something that is really something you want in your business? And I would say, no, you need to have additional suppliers here, but this product, outdoor kitchen, there may not be any other dropship suppliers. Okay, so then your next option is to take inventory on hand, but you're also not producing a high enough, margin to really make that appealing. Because then, then you got the warehousing space. You can't really 3PL all this outdoor kitchen stuff. Yeah, so that's kind of tricky here. So if we go back to the margin, or back to the valuation, the 3.51x seems high. I think for dropship businesses that are established, 2 to 3 is realistic. Maybe you look at this and you go, this thing is really difficult to duplicate because you can't, nobody else can get set up with this supplier. We've got the delivery network, etc. So then I'd pay a little bit closer to 3x. But on the flip side, you've got the risk of this supplier concentration. If they've only got one supplier, I don't think this business is worth anywhere near 3x. I think it's worth maybe like 2.25 or 2.5. This is just a very capital intensive and logistically intensive business. And by that, I'm referring to the fact that all these have to be delivered by the white glove delivery service or some delivery service for a large product, and you're beholden to the supplier. Ultimately here, this seems like a good business, but at the right valuation. And like I said, I think 3.5x is a little high. On that note, guys, what do you think about this business valuation? Let me know in the comments below. And if you found this video helpful or insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. And then look for the link below to acumenwired.com. Get signed up. I am calling it a wrap and signing off on this one.